afternoon. You're tuned into MF Corner on CNBC TV 18. I'm Vidhi Motiwala. With me is my colleague Sonal Bujwa as well. Sonal, a very good afternoon to you as well. And today, yes, we're going to be discussing something very exciting that is relevant in today's day and age. But before we jump to that, let's actually talk about the top headlines that are there in the mutual fund industry or what's happened in the last couple of days. Firstly, we'll talk about the SEBI. What have they taken in terms of decision? One, they have reclassified REITs as equity. Now, this announcement had come in before. Now, what has come in is that this is going to be with effect from Jan 2026. This will obviously help in terms of greater mutual fund participation coming in for REITs as well. So that is one important news flow in terms of the date that has come in there. Moving on to the next news flow, we had is that the SEBI has replaced B30 incentive framework with a targeted commission model offering distributors up to 2,000 rupees per new eligible investors from Feb 2026. So these are incentives and or commissions that go to distributors. There's a change on that front. And now, like I mentioned, rupees 2,000 per new eligible investors is what they could get as distributors. Let's talk about some of the new NFOs that have come in or are being launched this week. One, we have the Bandhan Mutual Fund. They've launched two commodity-based ETFs. One is the Bandhan Gold ETF. The other one is Bandhan Silver ETF. And obviously, given at such a time when you're seeing so much inflows or, rise in the prices of gold and silver, it's an interesting time that this is coming as well. Now, the fund will be opening for subscription on December 1st and will close on December 3rd. And again, the fund will reopen there for continuous sale and repurchase from 12th of December. So these are some of the key important updates that have come in the last few days, Sonal, right now.
Okay, yes. So it's always important to talk about the updates happening in the mutual fund industry, apart from the fact that we'll keep talking about ways to improve upon your wealth and returns as well with our experts on the show. So let's talk about that. Broader markets, they are facing pressure. Mid and small cap investors are reassessing their approach. Should they stay the course, rebalance, or adopt a more cautious stance? Today on MF Corner, we have Aniruddha Naha, who is the CIO at Alternates at PGIM India Asset Management, and also Tarun Birani, who is the founder and CEO at PBNG Capital Advisors, joining us now to discuss the strategies for navigating the small and mid-cap space. Aniruddha and Tarun, thank you so much for joining in today. And this is all somebody can talk about, right? The underperformance that we've seen in mid and small cap funds and in the stock markets and individual names as well. So Aniruddha, let me start with you first up. What are some of the key trends you are seeing right now in small and mid cap space? Are you seeing more rotation to quality names or continued volatility? And do you expect it to continue?
Thank you, Sonal. Thank you for having me on the show. So what is interesting is we're clearly seeing earnings, from an earnings perspective, we are clearly seeing earnings to be bottoming out. In fact, in many companies, frankly, we are seeing some amount of recovery, and this is across sectors in the small and mid-small micro segments. What is also happening is that people are, I think there is some amount of give up that seems to be happening out there, where people are selling irrespective of earnings. So from that perspective, I think the next 6 months will be a great time to build portfolios. You've got earnings starting to recover, and our belief is the next 2 quarters, earnings will actually reflect very well because the base is also reasonably weak. And in that time frame, if you get businesses, let's say, going through a volatile phase and some amount of correction, we believe it's a good time to go ahead and build portfolios in the mid and small cap space.
Okay, sure. Obviously it's time to build a portfolio while everyone is worried that, there is some bit of an underperformance, but an interesting time is the right time now maybe to start looking at building it. Tarun, coming to you, good afternoon. Thank you so much for joining us as well. Obviously, when you're looking at it, mid-cap, small-cap categories, they've shown high volatility, a bit of a mixed return when you look at it versus the benchmark indices as well. And otherwise, mid and small cap in the last 1 year have seen a bit of an underperformance versus the large cap ones, right? So how should investors currently position themselves, their portfolios? What are you advising them?
So good afternoon. I am of a very different camp, and I strongly feel your financial plan or the structure you have built to create your investment should drive your portfolio decisions rather than the market movement. I have seen that 90% of the long-term returns an investor gets is because of three reasons. First is because of the plan and the structure. Second is the asset allocation discipline what the investor keeps. And the third is their behavior, how they position themselves in the bad market, right? Based on that, only long-term returns comes. And I think human psychology, again, declining investment inflicts twice as much pain as the increasing value increase positive emotions. I think the current last 1 year, I have seen it has come with a back of great 2 years in small and mid cap, micro cap rally, right? And I feel it is nothing but a mean reversion, right? Any asset which will go so strong will again come back. So I think very importantly, investor need to have a plan, need to have a structure. What goals they are investing for? Is the investment for short term, long term, tactical? What is that purpose with which they are investing? Once that part is clear, I feel navigating all these volatile phases will be much better. And for any new investor who is looking at invest, my strong recommendation would be to look at their financial plan, their goals, and their asset allocation. That is the most critical thing, and in that, if a 30%, 40% mid and small cap is required, maybe because the valuations are little elevated, they can do a staggered investing route to invest in the market. That would be my suggestion.
Okay, all right. So we take that point, and also this question also comes by when somebody is starting fresh, right? Because there was a point in time everybody would talk about the big returns that mid caps and small caps would give. Now, as you said, there's a mean reversion. So there could be some bottoming out, who we never know. But somebody who's starting fresh, in that case, Aniruddha, in current phase, do you think small caps have bottomed out because of some of the underperformers? Do you think there could be more downside before the earnings recovery that you spoke about? This is for somebody who's building a portfolio, and there should be some mid and small caps according to their risk assessment.
Sure. So, Sonal, I think the assumption is that there will be some amount of allocation. It could be X, Y, Z percentage. But based on that, I think, again, as I said, what is happening very, very clearly, this is the first quarter probably after almost 7-8 quarters where we are seeing a reasonable recovery in small and mid-cap earnings. And when I mean small, I also mean I go down to even micro to that extent. So mid, small, micro, clearly this quarter has surprised across the segments, across sectors. What has happened is human psychology, just to pick it up. I think so. The fact that the last 1.5 years returns have not been made. Please understand this is coming. The context is 2020 to 2024. You made phenomenal returns. 2024 to 26, probably end of this financial year. It will take a couple of years for the investors to digest that kind of returns and mean reversion as it is said. But our belief is probably we are at that last phase of mean reversion over the next 6-9 months, and anyone who is starting now is probably starting very, very near to the bottom of, at least on the small cap side. Maybe the mid caps you could see a little further correction just purely because of valuations. If I take pure valuations and where earnings are coming through, I would be reasonably positive on good quality small caps out here to build and hold over the next 3-5 years and create wealth out there.
Okay, good quality small caps is what one could look at. Maybe some bit of fall one could watch out for in the mid cap side, and that's when you start building your portfolio, quality portfolio. Tarun, but are there any steps that a retail investor should maybe take if the mid and small cap fund of theirs, which they are holding currently, is maybe lagging the peers? And especially over this last 1 year, if you look at some of the names, it's a very contrasting view. Some of them have done terribly and some of them are still managing to hold on to some bit of a gain. So what would you tell them to do? Would it be maybe to stop the SIP which is underperforming, switch? How should they go about it?
I think, again, I would like to reiterate why you have invested at the first place. 1 year to review a fund, according to me, is not a right approach. I think you have picked a fund. There was a purpose behind picking that fund, right? So I think small underperformance. Again, these funds, small and mid caps, one need to view with a long-term horizon, at least with a rolling return data of 2 years, 3 years, 5 years. Then only you can make a judgment that they are underperforming. A 1 year underperformance is not a reason to act. again, one needs to understand, is this a performance noise or a process breakdown? I would actually look at exiting anyone if there is a process breakdown in a fund, right? Where there is a change in the fund manager, or there is a governance issues, or there could be many things which can happen, right? Which is impacting the performance. So I think those should be the reasons for you to exit, not a simple underperformance of last
Yes,
one year.
exactly. So when we say not just underperformance but other major factors as well, Tarun, let me come back to you on this and ask a follow-up, because we are seeing painful phase for mid and small caps. So say if something irks an investor, there's a fund manager change or a strategy change, it becomes not the exact fund where you invested when you wanted to do that long-term investing, right? Where do you advise parking money from that bad fund or that fund that does not suit your strategy? Would it be a hybrid fund, fixed deposit, or large caps if they wish to make that change from the current allocation?
Again, I think the question what you are asking, I feel it is not a proper question, because I think if your allocation of the money is for small cap fund, you can't move that money into hybrid or arbitrage money, right? It is meant for high risk, right? So you need to make sure that the allocation, if you have made in your plan, is aligned with a high risk investment. You need to keep a 5, 7, 10-year horizon on that. You can't just 1 year of underperformance, you move the money and move into category. I feel that is a very short-term investing, and this investing will not pay investor long-term dividends. So I am of the opinion that one should follow the asset allocation dharma. That is the most important thing, and that is where the long-term returns comes.
Okay. Following asset allocation, and obviously, parking your money which you have allocated mainly for a riskier asset, that is something then you should look at where you could park it later on as well. Doesn't mean you can shift the money or, you change your goal or stance over there. But on that note, we're actually going to slip into a very short break, continue this conversation after the break as well. Welcome back to Mutual Fund Corner on CNBC TV 18. Now let's keep the discussion going on the mid and small cap. What should you be doing in terms of strategy? How should you be moving about as well? Aniruddha, while we've spoken about, obviously you're saying that, it's the time to look at buying, but you said quality names as well. So how do you differentiate in such a market where the quality is the stock picking approach that comes in such a condition as well?
Yeah, I think so this is a very relevant question, specifically when you go down to small and micro caps. Even in mid caps, probably it is reasonably well defined or discovered to that extent. But when you go down to small and micro caps, I think the first thing that we usually try and do is to try create safety from a stock picking as well as a portfolio perspective. I think the safety of a business or in a portfolio relies on the quality of the promoters, and that is something over a period of experience of people get to realize. And the strength of cash flows that they generate, especially operating cash flows over a period of time. The operating cash flows are your cash flows which you generate from the regular operations of a business. Every business goes through a down cycle. In a down cycle, if a business has been able to generate positive operating cash flows, it speaks a lot about the strength of that business, and that's what we look for. And finally, we need to buy good businesses at reasonable valuations. I think valuations matter, and that is exactly where these 3 points which we think are probably today triangulating. One is good promoters where stocks have fallen off, have historically generated good cash flows, and to that extent probably have done capex, their gross block is up, growth has started coming back. We would stick to this framework. It has helped us through and throughout. So focus on cash flows, focus on promoters, and probably the leverage in the balance sheet along with valuations.
Take that point. So this is, of course, going the stock way. If you want to go through the mutual fund way, you can always take the constituents of a mutual fund that looks interesting and go about evaluating evaluating a mutual fund as well, of course. Tarun, what's your go-to advice for clients? When we talk about underperformance, of course, you don't change the category overall. If it is a high-risk product, you have to go to a high-risk product. But when you know when to pull the trigger, this is for somebody who's seen losses for 2 years but is not sure whether it's the right product for them or not.
I think in that case, that product has not been taken with a purpose, because I have seen many times, couple of years, 1, 2 years, the fund may underperform. It is not because the cycle can go wrong. any asset class which can give you double the fixed deposit returns need to have a long-term mindset. And if the investor does not have a long-term mindset, I think they should not be investing into equity. I think that is my strong suggestion. Again, I am trying to reiterate on that point only. Get your asset allocation and the plan correct. That is the most big problem I have seen with the investors. Investors are not focusing on that, and we are focusing more on the short-term things, which ultimately does not matter in the long-term wealth creation part.
So Tarun, so the question here is, somebody invested with an idea of a long-term return. They did do it the direct way. They didn't do it the regular way. So nobody really told them which mutual fund to invest into. They made a mistake there. Some of their funds, the mid or the small cap part of it, is underperforming. So how do they assess whether they should continue with this? How do they assess whether they should pull the plug or they should just go ahead with it? There must be some indicators. Say after 2 years you do that, after 3 years you do that. Some indication on that.
Yeah, so we normally look at some qualitative as well as quantitative parameters. So in terms of quantitatively, we look at rolling return data for 2 to 3 years rolling return data with category if there is a serious underperformance there. Risk adjusted matrix, if we are seeing the ratios are not correct. Qualitatively, if there is the manager true to the mandate? You have taken the money with some mandate and you are investing into another mandate. Is the investing style has drifted? Is the investment team stable out there? Is the AMC scaling responsibly? These are some of the qualitative parameters one can use while using a filter to invest. But normally it is you need to keep a long-term horizon when you invest into a small and mid-cap fund. It's a lot of patience one needs to have.
Okay. Patience is what one needs to have when you invest in the small and mid-cap funds. You know, Aniruddha, just talking about the small and mid-cap side, right? So in the current scenario now, you continue to be neutral, overweight, underweight on the small cap story, mid-cap story. And obviously, you said there are opportunities that one should look at. Anything specific in terms of themes that you're watching out for in the broader end of the market now?
Sure. So what we generally like to do is look for good businesses as we defined it in the earlier question, you know, good cash flows, they've invested, good promoters, but probably going through a down cycle because every segment goes through some down cycle or the other. So today, if I have to pick something for the next 3 or 4 years, where we are probably bottoming out. And because we are bottoming out in terms of earnings, the ROEs are depressed, valuations are suppressed. And, you know, there isn't too much of an interest in that sector. But if someone takes a 2-3 year view, does their own research internally, something like maybe a chemicals, agrochemicals is a segment where we believe there are very, very differentiated good businesses sitting out there at reasonable valuations. If someone has to take a look at textiles, it's a great opportunity for India, but for the tariffs. These are events which could turn around any day. And from that perspective, if someone takes a little longer term view, I think so textiles could be another sector which could really turn around. We are getting positive on discretionary consumption. We are seeing early signs of that coming through. The next year would be the pay revision from the government side. I think so that would also, you know, spur discretionary consumption. There are sectors where probably a little bit of price correction would give you a lot of valuation comfort. These are sectors which are lumpy, but for the real long term, one would be railways, the other would be defense. And finally, if someone really takes a 10-15 year view, I think healthcare is something which will turn out to be a very, very long term trend in India, just because we are very young as a population today. As we, you know, age, the requirement for healthcare will only keep pushing up. So from that perspective, these are segments that we like and are staying invested into.
Okay. An interesting chat there, interesting sectors that you highlighted as well. But Aniruddha as well as Tarun, thank you so much, you know, for joining us today, giving us perspective from the market front as well as the mutual industry front, what investors should do as well. Thank you so much for joining in. A quick roundup in terms of what we have seen in terms of a move for the mid and small cap. When you look at it, obviously category-wise, large cap in the last 1 year, gives you 6.5% return approximately, while the mid and small cap, there's an underperformance. Mid cap around 4.4%, while the small cap gave you a negative return of 4.7%. But this is overall that we were looking at it for 1 year. Now, when you look at it 3 years, we have seen that outperformance continue for the broader end of the market. That's the mid-cap funds as well as the small-cap funds, while large-cap funds have given around a 14 to 16% return. Category-wise, when you're looking at it, some of these underperformers that have come in from the mutual fund industry, the list will come up for you all as well. In the small-cap fund side, you've seen the underperformance in this 1 year return. So yes, Mirae Asset Nifty Small Cap, there is a Mirae Asset Nifty Small Cap Momentum Fund. Some of these funds have not done well. DSP Nifty Small Cap Fund, Tata Small Cap Funds, they have not done well. But what we understand and what we understood from this conversation, that mid and small cap is a long-term story. Do not panic just because, there is some underperformance for 1 year. 1 year return is not enough for you to judge it. So wait out for it. And obviously the points that they mentioned in terms of the checklist that Tarun mentioned as well, that you could keep an eye out on qualitative front, quantitative front. If those are the factors, maybe that's not working out for you, then maybe you can look at moving. But yes, long-term story for mid and small cap, that's how you should be looking at investing here. But that's all the time that we have on this edition of Mutual Fund Corner. Thank you so much for tuning in.